You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Friday, July 20th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. The first thing to know is U.S. President Donald Trump takes aim at the Fed. Trump broke a long-held presidential tradition of not weighing in on Federal Reserve's monetary policy when he criticized the central bank's plans for gradual interest rate hikes. The Fed raised rates twice so far this year, and Trump expressed his disappointment in a CNBC interview late Thursday. "I'm not thrilled," Trump said, "because we go up, and every time you go up, they want to raise rates again. I am not happy about it. But at the same time, I'm letting them do what they feel is best." Markets are forecasting that the Fed will hike rates again in September and put the probability for an additional increase in December at around 60%. The dollar, which has been buoyed by expectations of further rate increases, was trading lower against major rivals after 3 straight days of gains. Second thing to note today is Microsoft jumps on earnings with GE and Honeywell on tap. Corporate earnings will continue to weigh heavily on market direction amid a lack of top-tier economic data on the calendar for Friday. Microsoft stock jumped 3.9% in pre-market trade after reporting better than expected quarterly numbers that were boosted by cloud services revenue. The Dow component reported earnings of $1.13 a share on $30.09 billion in revenue. That was above Wall Street estimates of $1.08 per share on revenue of $29.21 billion. Third thing to know is the yuan undergoes volatility after Trump attack and China fixing. Market participants kept close eye on volatility in the USD CNY on Friday as Trump commented on the Chinese currency, but China's central bank also weakened its daily reference rate. In the CNBC interview, Trump commented that a strong dollar puts the U.S. at a disadvantage and emphasized that the Chinese yuan was dropping like a rock. However, that didn't stop the People's Bank of China from dropping the midpoint for a 7th straight trading day to 6.7671 per dollar on Friday. That's 605 pips, or 0.9% weaker than the previous fix of 670.66. Friday's fixing was the lowest since July 14, 2017, and represented the biggest one-day weakening in percentage terms since June 27 of 2016. The yuan treaded water after tumbling to a 1-year low earlier, with some observers suggesting that Chinese banks began buying the yuan and selling the dollar in an apparent attempt to prop the currency up. Fourth thing to know is U.S. stock futures pointed to a mixed open this morning despite Microsoft support. U.S. futures pointed to a mixed open on Friday as Microsoft's positive earnings supported tech stocks, but investors generally remain cautious. The fifth thing to note today is oil prices head higher despite the weekly decline. Oil prices headed higher on Friday, recovering from some of its weekly decline as traders focused on comments that Saudi Arabia would reduce exports in August and waited for the latest weekly data on U.S. drilling activity. Saudi Arabia's OPEC governor, Adib Al-Amma, said that exports in July from the cartel's top producer would be roughly in line with the 7.2 billion barrels per day that were exported in June, according to a Dow Jones report. Our second story today comes by way of CNBC.com. Amazon, Alphabet, and Facebook more than $2 trillion in market cap, and they report next week. A barrage of big tech earnings reports due out next week may overwhelm investors. After all, Alphabet, Facebook, and Amazon have a combined market cap of $2.27 trillion, and these stocks could see meaningful drops if they fail to impress Wall Street. The options market, however, seems to be telling shareholders not to worry. Stacy Gilbert, head of derivative strategy at Susquehanna, told CNBC's Trading Nation on Thursday what the options are implying for shares of Alphabet, Facebook, and Amazon next week. Here's what she said. From an options perspective, it's notable that the market is not pricing in increased risk, even giving some of the big rallies in these companies. Specifically, each of the names is expecting a move of 5% higher in either direction. And our final story today is from CNBC as well. Treasury yields are mixed after Trump hits the Fed again for raising interest rates. U.S. Treasury yields were mixed on Friday after President Donald Trump doubled down on his criticism of the Federal Reserve's monetary policy decisions. The short-term 2-year note yield fell 2.59%, while the benchmark 10-year note yield rose 2.884%. The 30-year bond, meanwhile, rose 3.02%. Trump went after the Fed for a second straight day, tweeting, "The United States should not be penalized because we are doing so well." Tightening now hurts all that we have done. The U.S. should be allowed to recapture what it was lost due to illegal currency manipulation and bad trade deals. Debt coming due, and we are raising rates. Really? And that, ladies and gentlemen, is news you can use for today, Friday, July 20th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a fabulous weekend.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.